But silver is sitting very near its cost of production. I mean, it's actually up around the 28.50 level, believe it or not. So silver's got some catching up to do. Will it? Yes. When will it? Probably next year. Right now, as you said, we're in a consolidation phase. I'm looking for silver to get above the breakout point, which is around 32.50, and hold that level for several days. And once we've done that, we're probably on our way. But so far, with this big move down and correcting back about 50% today, technically is a very strong sign. I think we are going to trade in the trading range probably through the month, maybe halfway through into December. I'm not expecting a real lot of upward momentum here. I think we're going to kind of just fade out in the trading range till the end of the year.
The silver market displays robust support, with bullish momentum hinting at an imminent uptrend. As silver reasserts itself in the broader commodity markets, analysts suggest it could see a substantial breakout in the coming months. According to DavidMorgan, also known as the Silver Guru, a sustained rally in silver may require a decisive break above $32.50 per ounce, held for several days. Should silver reach this level, it would indicate stronger underlying demand and a pronounced upward move could unfold in 2024 as silver seeks to overcome key resistance levels. Silver has briefly dipped below the 50-day exponential moving average in recent market activity, only to bounce back with signs of resilience. This pullback has, paradoxically, strengthened support just below current levels, notably around the crucial $30 mark. Analysts believe that despite ongoing volatility, the long-term trend for silver remains optimistic. In particular, the presence of the 50-day exponential moving average as a support level is a positive signal, suggesting that silver's bullish trend has solid ground for continuation. As always, inflation dynamics and the strength of the US dollar will be significant factors impacting silver's path forward. With geopolitical tensions adding to market uncertainty, some investors may increasingly consider precious metals a wealth preservation strategy. Silver's resilience in this context suggests it will continue to see substantial interest, particularly if the broader economic climate remains unsettled. The gold-silver ratio recently rose from 79 to 84, showing silver's lag behind gold. However, analysts predict a shift within the next year, with the ratio expected to fall to the mid-70s, suggesting silver will outpace gold. Silver expert DavidMorgan notes that if the ratio drops below 80 to 1, and potentially to 70 to 1, it would indicate strong momentum for silver relative to gold. Morgan anticipates this shift as early as Q1 2024, signaling a period of potential sustained gains for silver. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
You know, gold made a breakout at 2000. It kind of walled around that level, and then it shot up. We're sitting at, what, 2,700 something today, USD wise. And gold being ahead of silver doesn't bother me. What bothers me is we can't seem to break that 80 or so barrier on the gold-silver ratio. And, you know, for a long time, if you study these markets like you and I do, what you realize is that the price of gold and the price of silver for a great deal of time, I'm talking recent time, last 20 years, hovers very near its cost of production, which means it's very much being treated like any commodity, like corn, wheat, the soybean oil for that matter. But once it breaks free of that, then it's showing its monetary aspect. And everyone says, well, gold is money and everything else is credit. I won't go down that road. What I'm saying is that gold average, and I round it up because of the way the all-in sustaining costs are calculated. I do it a little different. But regardless, say 1,800. So now you got maybe $1,000 margin on gold. But silver is sitting very near its cost of production. I mean, it's actually up around the 28.50 level, believe it or not. So silver's got some catching up to do. Will it? Yes. When will it? Probably next year. Right now, as you said, we're in a consolidation phase. I'm looking for silver to get above the breakout point, which is around 32.50, and hold that level for several days. And once we've done that, we're probably on our way. But so far, with this big move down and correcting back about 50% today, technically is a very strong sign. I think we are going to trade in the trading range probably through the month, maybe halfway through into December. I'm not expecting a real lot of upward momentum here. I think we're going to kind of just fade out in the trading range till the end of the year, Peter. I mean, we go back, to the beginning of this bull market, the year 2000 roughly. The silver market industrial side was 35% of the market. Now it's over 60%. But the more important thing to remember is that 25 years ago, silver mining entailed 550 million ounces per year. Now it's 850 million ounces per year. So as a thought experiment, let's just take that 850 and around 2000 with recycling. So 60% of that billion ounce a year market, mined and recycling, is 600 million ounces. I think we can do that math in our head. So let's go back to 2000 when we only mined 550 million ounces. All right. So what I'm saying is if the silver production never increased beyond the 2000 level, which it has, industrial will take up all of the silver supply. Now it takes up 60%, but it's a bigger number. So the point is it's been a dramatic increase in use over the last 25 years. It has leveled off. It does ebb and flow in the last few years, up and down about 1 or 2%, which is almost meaningless in a number that big. And I don't see it waning. I see, more silver batteries use. Unfortunately, it's a metal of war. And the military uses are there. And if something gets blown up that uses silver, they have to replace it. Or if they're going to build up the machine, they will need more silver. So industrial-wise, story doesn't change regardless of inflation, deflation, stagflation, you name it. The need for industry is still there. On the investment side, it's starting to catch on again. And I'm convinced that we're on our way using Jim Dine's method of confirmation. The Dow theory needs to be confirmed. He was a big believer, and I agree with him that you had to have silver confirm gold or vice versa. And I think silver confirms gold once the gold-silver ratio is below 80. And really 70 to be comfortable. And I think we'll get there. Again, I think it'll be probably in the first quarter of next year.
The United States is grappling with a fiscal challenge as national debt and unfunded liabilities approach $120 trillion, according to financial analyst DavidMorgan. This amount includes commitments to military spending, Social Security, and Medicare. Morgan questions whether any leader can fully resolve these issues, suggesting that a comprehensive economic reset may be needed to address the growing obligations. In the wake of the recent election, many Americans anticipate that President-elect Donald Trump will likely push the U.S. government deeper into debt. According to a Reuters poll, while most Americans express concerns about potential fiscal risks under Trump's administration, most Republicans remain optimistic about his economic agenda despite criticisms from the opposition regarding his budgetary approach. As Trump takes office, he will confront a fiscal environment already strained by deficits and rising debt, which could challenge the U.S.'s position in global debt markets. Increased debt and potential budget shortfalls may reduce investor demand for U.S. government bonds, leading to higher borrowing costs and more pressure on the federal budget. Analysts believe that budget deficits and national debt would have surged regardless of the election outcome. While Kamala Harris might have added less to the deficit than Trump, both would face significant fiscal challenges, highlighting the need for structural changes in federal spending and debt management. Let's get back to the interview.
First of all, there's these knee-jerk reactions in the market. I mean, no one's more familiar with it than you or I and several others in our profession that have our age category. But I don't think it makes that big a difference. I was asked to write about that for editorial over in the UK. And generally speaking, if you have a Democratic administration, the metals do better. I think in these days it doesn't really matter because the overwhelming amount of information, what's going on with the US dollar, the BRICS community, the bond market, interest rate pressures, the debt accumulating at $1 trillion every 100 days. All these things come into play that really are much more powerful than what party's in the White House. Can Elon come in and really clean house and really put this thing back in order? Personally, I doubt it. If he does, I'll be, cheering him on as much as anyone. But the reality is it's mathematically impossible. And, if you cut back everything that wasn't absolutely essential, I still think you'd be running a deficit. It's not necessarily the 36 trillion that we're in debt right now. It's the unfunded liabilities. It's future payments to the military, future payments to Social Security, future payments to Medicare and Medicare. And those things are in like the 100, billions or trillions. It's in the trillions. It's just nuts So if you put them together, you're in like 120 trillion of current liabilities, what you have on your credit card you got to pay next month, or unfunded liabilities, a life insurance policy that you got to pay out on. So I don't know. I hate to be a doomer. I'm not. I'm a realist. The real truth is there's got to be some type of reset. I don't think that you could clean up the budget at this time. If you bought gold at the top of the market in 2011, when gold was just making it near 2000, you'd have to wait, 14 years or 13 years to get back even. But if you bought Franco Nevada at that time, at that high, you would have doubled your money. If you would have bought Silver Wheaton at the $50 silver price in 2011, which are only a little more than halfway there, you would have almost tripled your money. So people that say, oh, just buy the bullion because the stocks it outperforms the stocks. It depends if you're doing it on an aggregate and you're averaging all the gold miners together and you're putting that against the gold price, or if you're someone that knows how to pick the right stocks to make money in this sector. So, we've had good success, not perfect. And of course, I had to pick some juniors, or I feel I do. And, that is, fool's errand at times. I mean, I had the real hot hand for about almost 8 or 9 years. And then my hand has gotten as cold as anybody else's in the industry, but we keep trying. But I approach it differently than some guys. And my approach is, it's gambling money you could afford to lose until there's a material change in the market. And we had Penasquito as an example. And, once that, situation developed, I mean, that penny stock became several dollars. And I told my group that, you're safer buying it at $1.20 than you were buying it at 12 cents. Well, wait a minute, it's up a 10 bagger. Yeah, but now we know we have something. Until you have something, you don't.
The silver market shows signs of potential strength, particularly if it surpasses critical resistance levels, which could indicate a solid upward trend shortly. As economic pressures mount in the U.S., with increasing national debt and potential fiscal challenges, silver and other precious metals may become more attractive as safe haven assets. This positioning reflects broader investor interest in wealth preservation amid an uncertain fiscal environment, suggesting a positive outlook for silver's role in diversified portfolios. How could rising U.S. debt levels and potential fiscal constraints impact silver's appeal as a safe haven asset in the coming years? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.